Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Kolte Patil Developers. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shiv Mattu of CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on the Q3 FY22 results conference call of Kolte Patil Developers Limited. We have with us today Yash Patil, Joint Managing Director, Rahul Talele, Group CEO, Vikram Rajput, Head Investor Relations and Corporate Finance, and Pawan Lohia, Head Finance. Before we begin, I would like to state that some of the statements in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available on the Q3 FY22 results presentation that has been sent to you earlier. I would now like to invite Mr. Yash Patil to begin the proceedings of this call. Thanks.
Good afternoon, everyone. A very warm welcome to everyone present on this call, and thank you for joining us today to discuss the operating and financial performance of Kolte Patil Developers Limited for the third quarter and 9-month period ended 31st December 2021. We hope all of you, your families and colleagues are keeping safe and healthy. I would like to begin by discussing our view on the overall demand environment for the real estate sector and the broad strategic outlook. Then Rahul will share some insights into the quarter operating performance, followed by Vikram, who will take you through the key financial highlights for the quarter, and finally we will take your questions and suggestions. As our country and the entire world emerges from the exceptional disruption caused by the COVID-19 pandemic, we see key economic indicators now reaching or even exceeding previous pre-pandemic benchmarks. With a sharp bounce back expected in GDP growth in the near term and improving longer term outlook, the real estate sector is poised to benefit with expanding drivers across both residential and commercial segments. Based on our assessment, we expect demand-led factors to create higher residential volumes in key markets, with firmness returning to values after several years of time correction. With improving affordability parameters, buyers are now in a position to look for bigger and better residential spaces. They are also looking for developers with strong credentials, compliance adherence and execution capabilities, which is already resulting in market consolidation. These trends could only be expected to accelerate as the trajectory of economic growth, improving living standards and rising urbanization continues to progress after a brief pause due to the recent exceptional situation. Within this macro space, certain markets that are driven by sharp improvements in the longer term outlook could be expected to outperform. At Kolte Patil, we believe we are well positioned to benefit from both broad emerging consumption themes in the sector as well as our specific exposure to markets that draw visibility from the re-emergence of growth in specific economic sectors. Let me also highlight our views on business development here. We are not into signing aggressive business development deals just to move the needle on market perception. See, if the deal goes wrong, the money never comes into the P&L. So there are a lot of things to consider, such as sales velocity can decline, the cost increases, launch delays due to approval risks, lack of appreciation realizations, and so on, etc. We are one of the few real estate developers where the bookings, collections, delivery, and revenue cycle matches in 3 to 4 years time frame. Consistent P&L performance, operating cash flow generations, and double-digit returns have come in. To summarize, yes, we will scale up faster than we have in the past, but we'll continue to maintain financial discipline. Over the next 12 to 18 months, we are targeting business development of approximately 10 million square feet, which includes 8 million square feet in Pune and the rest from the Mumbai and Bengaluru markets. This translates to a top-line addition of 6,000 to 7,000 crores. With that, I would now like to hand over the proceedings to Rahul to discuss the operating highlights and business outlook.
Thank you, Yash. Good afternoon to everyone attending this call. Each successive quarter in FY22, our operations and performance has strengthened. We have hit significant sales milestones in Q3 FY22, which has been our best ever quarter in the last 7 years, both in terms of sales volume and sales value. Sales value in quarter at rupees 561 crore improved 77% year on year and 31% quarter on quarter, while sales volume in Q3 FY22 at 0.86 million square feet improved 56% year on year and 28% quarter on quarter. We have now achieved sales value of rupees 1238 crore in the first 9 months of FY22, which is more than the full year sales value of 1201 crore for FY21. Overall, our business has the momentum to end FY22 on a strong note. Sales traction has been strong across the markets of Pune, Mumbai and Bengaluru, as well as across product categories. Life Republic continues to be a landmark and has been the top selling project in the entire Pune market during calendar year 2021. During the quarter, we successfully launched R16M and R1C sectors at Life Republic that has once again seen positive customer interest. Overall, during Q3, we have sold 470 units at Life Republic and 264 units at Universe, which is a sector within Life Republic. Further, Equa at Wagholi launch during the end of December has witnessed a healthy response despite the onset of third wave. Our robust sales machinery and brand equity is getting increasing recognition not only in Pune but in Mumbai and Bengaluru as well. Our diversification story continues to play out well, with Mumbai portfolio contributing up to 25% of total sales value. Mumbai region reported sales value of rupees 143 crore in Q3 FY22 as against rupees 57 crore in Q3 FY21. On the back of an uptick in work and sustained momentum at another project, Vayu. Mumbai contributed rupees 321 crore to sales value in 9 months of FY22, which is significantly higher than full year sales value of rupees 180 crore in FY21. Bengaluru also recorded sales value of rupees 30 crore in Q3 FY22, taking the contribution from projects outside Pune to 31% during the quarter. The increased focus on Mumbai enables an optimal blend of volume and value. We entered the large Mumbai market through a niche society redevelopment, which perpetual opportunities. In the redevelopment segment, rarely the highest bid the winning bid. We strengthen our value proposition, credibility and trust through focused initiatives. Transparently engaging with society members, judicious carpet area offerings, minimal upfront cost, and moderating working capital outlay and flexible portfolio mix. This has earned us attractive visibility and brand presence in Mumbai. We have a good brand recall in Mumbai due to the geographical interdependency between Mumbai and Pune. Also, a meaningful part of Mumbai sales comes from Pune sales comes from Mumbai. The financial and banking community knows us well. We have built good channel partner and construction relationships in the last few years. We have a strong team in place, especially in license. We do it internally. Our ecosystem is built now. The proof of this was Evara, which was our first Mumbai launch in last 4 years, getting sold within 6 months, as well as us driving top quartile realizations at Vayu and Worth. In addition to redevelopment, we are looking to grow our Mumbai portfolio and execute new outright structured and JV/JD deals in Mumbai. In terms of project acquisition, our project sizes will be in the range of 300 crores to 800 crores as a top line, and ticket size of units will vary from 1.5 to 3.5 crore. Despite the third wave, Omicron, construction continued at healthy pace There was no work stoppage, and we have managed to avoid labor migration and retain our entire workforce. This reflects in our collection performance, and improved momentum in sales, registration, construction, and CRM drove Q3 FY22 collections up 10% year-on-year and 13% quarter-on-quarter to rupees 421 crore. Going forward, KPTL is geared up to scale its operation while maintaining a strong balance sheet. We have a robust pipeline of launches for the next few quarters across our 3 core markets with aggregate sellable potential of 5.3 million square feet and aggregate top-line potential of approximately 4,600 crores. From a sales perspective, January 2022 has been a healthy, with only the first week seeing a slight drop in walk-ins. And from there on, sales picked up. We expect we end this year as the best ever from a sales value perspective. Given there are not any prolonged and severe lockdowns. Most importantly, we are evaluating several business development opportunities in line with our aggressive growth objective. The propensity of landowners to associate with Kolte Patil has been increasing in Mumbai as well, and we hope to conclude some value accretive deals in the coming quarters. As a company, the focus remains on creating many more performance records and enhance value for all stakeholders. With that, I now hand over the proceedings of this call to Vikram to provide a financial overview.
Thank you, Rahul. Good afternoon, everyone. I hope that all of you and your families are keeping safe and well. I will now briefly take you through our financial performance for the quarter ended 31st December 2021. Based on CCM accounting, in Q3 we reported revenues of 240 crore, up 26.3% YOY, and in 9 months we reported revenues of 741 crore, up 87.4% on a year-over-year basis. EBITDA for Q3 stood at rupees 31 crore compared to an EBITDA of 46 crore in Q3 FY21. EBITDA was at 146 crore in the first 9 months of FY22 versus 24 crore in 9 months of FY21. Our net profit after tax post minority interest came in at rupees 5.4 crore compared to rupees 23 crore in Q3 FY21. Net profit was at 53 crore in 9 months of FY22 as compared to a loss of rupees 26 crore in 9 months of FY21. Here we would like to remind you that the recognition of revenue and profits are dependent on the timing of project completion based on statutory accounting guidelines. Our focus remains on maintaining sales performance, timely execution, and cash flows, which will continue to drive P&L performance over time. The liquidity in our business operations remains strong, resulting in further reduction of rupees 42 crores in net debt in Q3. Further, we have reduced net debt by 138 crore during the 9 months of FY22. Our net debt to equity now stands at 0.19 as on December 31st, 2021. Further, over the quarter stood at 116 crore and at 342 crore for the 9 months of FY22. We now expect to report an improved performance across operational and financial parameters to end the year on a strong note and look forward to building on these achievements going into FY23. On that note, I conclude my opening remarks and would now like to ask the moderator to open the line for Q&A.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Hi, good afternoon. Thanks for the opportunity. So first question on, I think your realization at Universe R10 phase have reached a very impressive level of close to 6,000 rupees per square feet. Just on whatever new sectors that you have launched this quarter that were outside of Universe, what were the realizations for those sectors?
So, hi Pritesh. I think realizations for R10 sector were high because of, we are running a scheme of 2080. So they are looking on the higher side of 5,800 and above. And I think the rest of the sectors we are around 5,300.
Okay. So any material increase that you have taken versus what whatever we have launched earlier?
So like we explained in the last quarter, we had increased our prices overall in the township from 5,000 to 5,300.
Okay, got it. Fine. And in terms of launch pipeline, I think for 5.3 billion square feet that you highlighted, how close we are, to launch few projects in maybe this quarter or next couple of quarters? I mean, are the approvals coming on time, or is there any delays on that front? And what would be, specifically Mumbai launches? When are they coming into stream?
So, Pritesh, particularly for the Mumbai launches, Golden Pebble and Sukhnivas under process of approval. So that will be so both of them with a top line of around more than 400 crores. So that will get launched in the month of last week of March or early first quarter. So of next financial year. Apart from that, there are 4 projects lined up for the launches in next 3 months. One is at western part of Pune, Baner, with a top line potential of around 1,200 to 1,400 crores. One project at Tathawade, that is again a western part of Pune, and couple of sectors in Life Republic that will also get launched in early Q1. And at the same time, the Giga is getting launched in next 10 to 15 days. So we have applied for the RERA.
And just to add to that, also in Bangalore, I think Raga 3, we have closed the plans, so they are under approvals. So I think, with the EC, I think we'll be expecting it, maybe first quarter of FY23 in 3 months' time.
Okay, so most of them we see launching in this quarter and next quarter.
So Pritesh, all these projects are under approval at this stage, and we are expecting to get approvals in next 45 to 90 days, and post that we'll complete the RERA formality and we'll run for the market launch.
Sure. Got it. Thanks. And lastly, on business development, obviously that has been our focus since last, I think, many quarters now. Obviously, we are evaluating, deals, but at what stage we are in terms of, getting these deals on stream for our future project pipeline? I mean, we don't want you to rush on that, but just if you can update on the status of, how we are progressing on this front, and what are we getting stuck at, if at all?
So, Pritesh, even during the last call, I have mentioned that it is not this is BD activity is not an event, it is a process. And we follow that very diligently, and that is one of the reasons that we have not defaulted in a single project that we have taken in the past. And we want to continue with that kind of approach with the profitability at project level. At the same time, we are very serious about the, aggressive BD closures within the project, within the company. So just to tell you, see, we are currently evaluating more than 30 million square feet of BD proposal, not in an initial stage, in a mid or advanced stage. But certainly, so you cannot take this as a guideline, because see, there is a very in-depth kind of checklist that we follow. So right from a technical due diligence and the legal due diligence. Once that is over, I will be in a better position to communicate with better positive, outcome to the market. But trust us, we are taking that very seriously, and in next, few months, certainly there will be an interesting announcement in the market.
Sure. That's very helpful. Thank you, and all the best to you guys. Thank you.
Thank you. The next question is from the line of Prithvi from Unifi Capital. Please go ahead.
Yeah, hi. So this is regarding the area sales number. Okay, over last few years, we were doing close to 2.5 million square feet per annum. Okay, now given that your new team is in place and, the industry tailwind seems to be good. So how are we looking at, the area sales ramp up in the next couple of years?
Sorry, yes. So, see, basically, we'll end this financial year of best ever, what I mentioned in the opening remark. And if you add 15 to 25% on that, certainly it will be a 2,000 crore plus number for the next financial year, and we are confident that we'll achieve that kind of numbers across 3 geographies.
So even on the volume terms, can we expect 3.5-4 million run rate over the next couple of years?
See, basically our per square feet realization is going up and up every quarter. So considering that, and see, certainly it will be more than 3 million square feet for the next financial year. But certainly we want to give focus more on the value rather than giving more focus on the volume.
Okay. That's it, yes. Thanks a lot.
Thanks.
Thank you. The next question is from the line of Bajrang Bafna from Sunidhi Securities. Please go ahead.
Congratulations for the very strong set of pre-sales numbers that the company has achieved, and by far it is much better performance that we have exhibited. So Rahul sir, you have already indicated that the potential pipeline for the company which you are looking at. The numbers that you have presented in the PPT is 5.3 million square feet and 4,600 crore kind of sales value that is already in the selling stage. But if you could highlight, you've indicated some 30 million square feet kind of deals that are there in the pipeline and where you are evaluating that. And considering all those aspects, I think in this year we are going to surpass this 2.5 million square feet guidance that you have given, and hopefully will be close to 2.7, and now you're guiding 3 million square feet for the next year. But I think the pipeline is indicating completely a very a strong indication that there is a humongous demand in the system, which is perhaps you are exploring at this point of time. So if you could just highlight more in the sense of pre-sales, as well as what sort of margins that you are looking at, because you see for last 3 quarters, of course we are doing very well in terms of our pre-sales numbers, but in terms of P&L, that is something which is equally important for us to exhibit, and we were selling 1,200 crores kind of run rate for last 3-4 years, and this year those numbers are exhibiting in P&L, and there we are not getting very decent set of numbers on that front. So if you could highlight how the numbers are going to be visible maybe in next year, even from a P&L perspective, will be really appreciated, sir. Thank you.
Hi, Mr. Bajrang. Thanks for your in-depth question. So let me answer point by point. So first you mentioned about the 30 million. So that is the the quantum of deals that we are currently evaluating, not at the primary stage, at the mid or advanced stage. So that does not mean that all are in the advanced stages of discussion. So point number 2 is certainly we are confident that we'll surpass our 2.5 million square feet of guideline for this year, and next year it will be certainly more than 3 million square feet. So third, regarding the margin, that what you mentioned, see, basically it varies from a project to project at the time of BD evaluation. If the projects are a joint venture or JD project, so the margins will be, the EBITDA margins will be on the absolute margins will be on a lower side, but over there the IRRs will be on a very higher side, because I have to give landowner just a deposit, and I need to spend for the marketing and go to market kind of cost in the project. Whereas for the outright, the absolute margins are on a higher side of 30%, 35%. But in terms of the IRR, again, it will be in the range of 25 to 40%. So for absolute margin perspective, certainly there will be a difference. But from the IRR perspective, it will be matching our expectation of 25 to 35% of IRR. So now regarding the P&L, which is coming into our the presentation, see, basically all costs are, particularly the all corporate level overheads are getting recognized on quarter. So it is rationalized throughout the year. So, and at the same time, revenue is getting recognized if we are getting the OCs. So, and the OCs is not rationalized throughout the year. There can be a spike in few quarters. There can be no OCs in few quarters. So certainly this is not a right indicator to measure the performance. What Vikram mentioned during his opening remark, and Yash also mentioned. See, basically, we are selling, our pre-sales number are strong, our operating spend is strong. At the same time, we are collecting almost equivalent to our pre-sales number. That itself shows our strong execution capabilities without compromising on our margins. And if you see the project level margins, we are maintaining our project level margins. So EBITDAs are in the range of 20 to 25%, and the PAT will be in the range of 10 to 13% at the corporate level. I hope I could answer your question.
Yeah, fully appreciated, sir. I just asked this question for the benefit of all the participants because, we have a tendency to also look at P&L, but in real estate, more important is the cash flow. So I think you have rightly pointed out that aspect. But just to get a sense, sir, what sort of OCs, we are going to see probably in Q4 and maybe in FY23. So if some sense, if the finance department can give us in terms of, P&L visibility also next year will be really appreciated.
So in Q4, our OCs, the revenue recognition will be in the range of 350 to 400 crores. And in Q1 next year, it will be additional 400 crores, 450 crores.
Okay. Got it. So probably next year on an overall basis, year on year will be better than what
certainly.
We are in FY22, even on P&L perspective.
Mr. Bajrang, see, basically, many of our projects are in the advanced stages of, the development. So the finishing work has started, RERA timelines are approaching for the next financial year. So certainly, next financial year will be one of our highest deliveries in terms of the volumes. That will ultimately reflect in our financial.
Great. And wish you all the best, sir, for your future performance. Thank you very much.
Thank you, Mr. Bajrang.
Thank you. The next question is from the line of Manoj Dua from Geometric. Please go ahead.
Yeah, congratulations on good sales of pre-sales in this quarter. My question is regarding PDA.
Mr. Dua, so sorry to interrupt. Your voice is a bit muffled. If you can speak closer to the device, please.
Okay, it's now okay? Okay, let me change.
Not yet.
Still slightly muffled, Manoj.
Yes. Now it's okay?
Yeah. Yes.
Okay, so congratulations on the good pre-sales number.
Thank you, Manoj.
Manoj, we lost your voice.
Mr. Dua, we are unable to hear you, sir. Your audio is not coming in.
Manoj, please dial in back.
So seems like we lost the connection for Mr.
Yeah,
Manoj.
we can
We'll move to the next
question.
question. Sure. The next question is from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Hello.
Hi, Rohit.
Yeah. Hi. Thank you for this opportunity. So, just 2-3 questions. So one is, there was a note on your financials regarding the Sunflower Properties and Planet Finance, Planet UK, and you have done a deal with 20 to 80%, 20% to KPDL and the rest to Planet UK. So can you just explain that a bit? I couldn't really understand.
Yes. So let me explain the business rationale. So basically, it's a win-win deal for all three parties, especially for KPDL, as loan repayment of rupees 25 crore has happened through that transaction. Also, our realization will also benefit. There will be a better realization per square feet with the introduction of Planet, because they will come up with the smart solutions. At the same time, their community engagement experience is also very good. And certainly there are some tangible benefits that we have added in this deal in terms of the project management fees and like that. So, and at the same time further, since ASK was with us since over 5 years, they were also fine with this exit. So on an accounting side, Pawan, why don't you explain? Okay. If
From an accounting perspective, this was treated as a subsidiary earlier, but because now we hold only 20% in that entity, going by Ind AS 110 on consolidated financial statement, this needs to be de-recognized statement, and that's the reason those fair valuation adjustment entries have been passed in the book.
So, just to understand this further, so this is how much of in terms of square foot that this land or this property, how much square foot that this was having? I mean, in terms of potential development area.
I think the unsold is around 2 lakh square feet, which is around 140 crore.
Yes, that's right.
Yeah.
Okay, and so any development, whatever development we would need to do or anything that we would need to do, 80% of that investment would be done by Planet UK, correct?
That's correct.
Understood. Okay. Thank you. So that was one. Second question was, sir, we are saying this year probably beyond 2.5 million and then next year beyond 3 million. In terms of these numbers sort of coming into the P&L, it should probably take 2 years or 3 years. What is the typical lead lag time?
So this will have a constitution from across verticals. So some of them will be, G plus 12, 14 story. So that will come into P&L in couple of years. Some of them will be, 70 meter kind of developments that will come in P&L in 2.5 to 3 years. And few high-rise projects that will take 3.5 years.
So you can say between 2.5 to 3 years on an average. Is that a fair estimate?
That's correct.
I think 3 years will be an average. Yeah.
2.5 would be around average.
Yeah.
And this would be would it also be fair that your Mumbai society redevelopment would be a faster turnaround than your average of 2.5 years, or will that be higher than the average?
See, currently all projects in Mumbai, those are high-rise projects. Considering that, and the new pipeline project is again a high-rise project. So considering that, 2.5 to 3 years is a comfortable timeline.
Yeah.
Understood. And so last question in terms of your BD itself. So obviously, you mentioned and you said that you have a long pipeline and a big pipeline. So just want to understand, we're also hearing that in terms of, in general, prices are going up, especially land prices. So, how do you view internally, over the last 1.5 years, we've heard across different areas in India, land prices have gone up sharply. So how do you guys do it internally? Because the more we delay, the more our mix may get impacted. Is that the right way to think about it? Just wanted to hear your views from this point of view.
So basically, Rohit, see, the primary logic behind the appreciation in land prices is the infusion of additional FSI by the state government. On a per square feet basis, on per sellable square feet basis, the land prices are still intact. But so there is suppose the land area is say 10 acres, 4 lakh square feet, but the sellable potential earlier was say 10 lakh square feet. Now it has gone up to 15-16 lakh square feet. So land in absolute terms per square feet on land area, the rate has gone up, but not in terms of the FSI. Rather, it has reduced a little bit. So on a per square feet basis, our numbers are still intact. And considering our track record in Pune, we are getting certainly a better deals as compared to others. So the deals that we are currently evaluating, which have very good terms as compared to the market announced deals.
Got it. And sir, if I can just follow up with one small question. In the past, you've done DM deals also in Pune. Now, obviously, there is a revival of this overall real estate space, and given a strong positioning, will there be a preference for us not doing DM and doing more either JV or outright kind of purchases, which are slightly more capital intensive, but from an upside point of view, much better? So just wanted to get your sense.
I think our focus is going to be on JV, JDs and structure outright, and DM will remain, but it will be a very small percentage of the portfolio. Maybe 3-4 deals, maybe from the overall portfolio. Because on DMs we need to have the confidence on the landowner for him to complete. So unless he matches our due diligence and we are confident on his financials, we would go ahead with the DM. So DM would remain a very small in our overall portfolio, and maybe 3-4 deals.
Got it. Thank you. Thank you very much, and all the very best for the upcoming quarters.
Thank you. The next question is from the line of Manoj Dua from Geometrics. Please go ahead.
Sorry for the disconnectivity. First of all, congratulations for good sets of numbers. My questions were regarding BDA. What kind of deals we are getting? In the keeping the picture, there is a good revival in real estate broadly, and there are many factors which are helping real estate company. So now do you find getting more better deals or less better deals as compared to last year? And what do you see the future of this trend going forward for the next 1 year? And my second question is regarding BDA in Mumbai. So what are the new things we are doing? Give some color on the redevelopment BDA specifically in Mumbai, which is a very high attractive sector for us, keeping us a high return ratio and a good opportunity side. Thank you.
Interesting question, Manoj. So basically, we are, deals were there in the market since last few years. The only thing is now everybody is running behind details, and certainly we have strengthened our BD details, and we are spending a lot of our time in that evaluation of BD details. That is one of the reasons that as compared to last year or last few quarters, we are evaluating a more quantum of BD deals at this moment of time. And this is the sizes are in the range of 1 million square feet to 3-4 million square feet kind of BD deals, particularly for Pune. And in Mumbai, our strategy is very simple. We want to have a projects in the range of 300 crore to 800,000 crore of top line, and with the sales value per square feet in the range of 12 to 17,000 per square feet. So in terms of our Mumbai strategy, what different that we are doing this year is particularly, again, what I said about Pune, that is true for Mumbai. We have strengthened our BD team in Mumbai, and now there are two verticals. One vertical is taking care of a redevelopment kind of BD deals, and one vertical is taking care of the all set of the JV, JD and structured outright transaction. So apart from that, we have identified few micro markets apart from the western suburbs, wherein we had the strong presence earlier. So we didn't have a presence in the central and the new Mumbai market. So over there we are evaluating multiple BD deals, but only in selected micro markets.
Okay. Any particular kind of deals you are looking in Pune? Any large parcels or a township, or can you give some more color on that? What kind of pipeline is there?
So see, there are multiple. So let me give few examples without disclosing a further detail. So a couple of deals are ready to launch kind of deals. So earlier developer is now unable to perform better, and we are taking over those kind of deals. So we are evaluating that how we can take over those deals. Couple of deals are like in the range of prime location, with a per square feet realization in the range of 6,000 to 8,000 rupees a square feet, with a top line potential of around 1,000 crore square feet. And few deals are of a good size, with a visibility of next 6 to 8 years, and the potential of 3 to 5 million square feet. But particularly with the ticket size of, the per square feet rate in the range of 4,500 to 5,500. Or in that segment only, we are evaluating the parcel.
Okay.
So that we can, we can finish the project in 5 to 6 years, even though the size is very big.
Okay. These questions were coming from because what we are assuming with the revival of real estate and with the kind of balance sheet we have, it would be very appropriate to have this pipeline for next 4 or 5 years, which we can build with all the compliance in a little bit faster way, because that will help us to have a better choices, because the real estate revival is leading to the better health of the many real estate companies. And my last question is, with the 2,000 crore sales expecting next year, I know it will be recognized in different stages. What kind of EBITDA margin we can expect from this set of pre-sale which are going to happen in next year? Thank you. That's my last question.
So let me answer a part 2 of question. So when in terms of the EBITDA margin, it varies from a 20 to 25% for the projects in Pune as well as Mumbai and Goa.
Yeah, and to address, I think, your first part of the question, I think, of course, we also as a team are very cognizant that, this upcycle has come, and I think we are also very bullish and, gunning for, closing deals. So I think we are hoping to announce something very soon, and I think, the whole quarter or 2 quarters, once our due diligence is done, we'll also be able to announce deals. So we are also equally upbeat because the cycle has come after 8 years, and we see that this is here for 5 years. So we are also gunning for, business development to happen as quickly as possible.
Thank you, and best of luck.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Security. Please go ahead.
Hi team, congratulations on a good set of numbers and pre-sales, strong pre-sales momentum. So my first question is on the business development pipeline. So the next 12 months, how much of this can get converted in terms of numbers if you can quantify? So what kind of BD additions you are looking at for the next year? And if you can give a breakup between Pune, Bombay, and between outright JV, JD, and redevelopment.
So you want a composition of deals? Sorry,
Yes, sir. The first question is, how much is the quantum in terms of number? Either you're looking to add 2,000 crores every year in terms of GDV addition on the business development side. Then I want a breakup of this into Pune, MMR, and Bangalore. And third would be outright JV, JD, and redevelopment. So that kind of breakup.
So see what Yash mentioned in opening remarks. So basically we are gunning for a 10 million square feet of the business development activities in 3 geographies. Out of that, around 7 to 8 million square feet will come in Pune with the top line potential of around 4,000 crores. And 2 million square feet, 2 to 3 million square feet will come from Mumbai and Bangalore together. So that will add another 2,500 crores.
And this will be over what time period, this 10 million square feet addition? If you can break it up into years, like what is the current advanced stages, in terms of advanced stages where you are looking at a closure in this FY22, you can quantify at least for this 4,000 plus, so 6.5, 7,000 crores breakup. If you can give it year-wise, that will be helpful.
So basically this will come in next, 4 to 18 months. Particularly, see, whatever that will sign the deals in the first half of the next financial year, that will be materialized and will get launched in the next financial year itself. Next will be, for the further financial years. But we are confident that we can achieve this, the guideline of crossing 2,000 crores for next financial year.
And I think, like in this quarter, we proved that, the contribution of projects outside Pune was 30%. So I think that will continue. We see a similar trend continuing.
No, yes, my question was on business development pipeline. I'm not talking about pre-sales. So I'm asking in this 6.5, 7,000 crores of BD pipeline, how much, if you can give me year-wise?
Your voice is a little...
One second. I'll just move on the... So I was asking that out of this 6.5, 7,000 crores of 10 million square feet of BD potential, how much of this, if you can give a year-wise breakup of FY23, how much we can add from this, or how much of this will get materialized? If you can just give some sense there.
I think it's simple. See, this year we have done around, suppose say 1,500, 1,600 crore, and next year we are at 2,000 crore, or say 2.5 million to 3 million square feet. So it's 0.5 million square feet there that we are looking to add. So 5 lakh square feet means if we add 2 projects that are giving a run rate of 20,000 per month, 2.5 lakhs. So we'll complete our 5 lakhs. And so that's, I think, the guidance we can say for now, I think, for next year.
See, at this moment of time, closure of BD deals, we cannot give any further guidance. certainly you will see a couple of deals closure in one quarter and maybe a no deal closure in the another quarter. So, but certainly we want to give that kind of assurance to all the stakeholders that we are constantly focusing on the BD development activities, and that will certainly get resulted into a concrete outcome.
Okay. My second question is on the launches. So there are 3 launches. One is Baner, which is a mixed use. Then there is Isla, which is a commercial, and Boat Club, which is commercial. So these are mixed use means commercial and resi both. So are we going to own any of these assets on our book, or these all commercials are for sale in the market? So if you can give some clarity on that.
So basically, all these commercial is for sale. This is a strata kind of commercial that we are going to develop, and this will be for sale in the market. It is a mixed use kind of project. Retail and commercial is there.
So in these places, has the commercial, is it more for FSI optimization, or is it that the commercial realization is much higher than the residential realization in these 3 places, Baner and Viman Nagar and Boat Club Road? So.
Yeah, I think the location also is strategic, and we are facing the highway. So there is the commercial and the retail to get better margins, and at the same time using those cash flows for our residential to have financial closure.
Okay, and just last things around 2 projects which have been lying there for quite some time in the land bank, which is the Hound and the Kalyani Nagar, 1 million each. So if you can just update us on the status, approval status, launch planning for these 2 high value projects, if you can give some color there. So is there any encumbrance on these projects? Is the title clear? So why is these projects still not part of approval or under approval, still earmarked under the land bank? Just give some clarity there.
So basically, particularly for the Hound project, we are evaluating how we can take the benefits of this unified DCR. And Kalyani Nagar project, we have already started on the planning side, and it will get added to the launch pipeline maybe in next 6 months.
Okay, so next 6 months you plan to launch the Kalyani Nagar project?
Yes.
And that will be residential, all residential?
It will be a residential development.
Okay. Great, sir. The launch pipeline looks quite robust. Hopefully,
at the same time, there is it's under a TOD zone. So basically, how we can take the benefit out of that, we are waiting for a further clarity, and that's the reason our planning is ready. We are waiting for a further clarity from the corporation. Once we get that clarity, we'll go for approvals for that particular project. What I mean by TOD, there is a unit size restrictions of 60 square meter of 50% units and 90 square meter of 50% units.
But why is that restriction? I mean, is it like...
It's close to a metro station, and there is a certain FSI benefit for that, but that locality is more inclined towards the premium development. So we are evaluating how we can take the advantage.
So the government in its circular is thinking of revising the 60 square meter, 90 square meter. So once we get that clarity, I think the GR, I think we can go ahead with the planning. So that's what we are waiting for.
I mean, you have enough to launch so for the next year to achieve that 2,000 crores. So I was more coming like I want a little bit more clarity on what kind of business development pipeline can build up and get converted. So at this point, I think you highlighted that maybe you will not be in a position to guide that. But what I could understand was that you are still clearly evaluating a lot of opportunities, and some of that may get fructified over the next 6 months. But as of now, in the near term, I don't think you need to worry about launches because you have enough to launch. Okay, so just last thing, if I may, the debt has been coming down quite a lot in a cycle which is like very strong. So do we look forward that towards that now the debt is maybe at the lowest level, and from here on we can see accelerated BD activities, maybe some outright land purchases which may lead to your debt increasing from here on?
So basically, just to give you an insight, we are currently evaluating, we are currently at a term sheet stage for the debt of around 250 odd crores, and that will get utilized for the, obviously for the next round of business development.
Okay, great, sir. Okay, sir. Sure, those were my questions. Thank you and all the best. Bye.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. For any follow-up, may we request you to rejoin the queue. The next question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi, good afternoon, and good set of numbers. My question is on Life Republic, okay? So in Life Republic, we are working with FSI of 1, and to reach 1.7, we have stated that we need to spend rupees 50 to 60 crore. And break even for that has to be around a realization of rupees 6,000. So, and would not it be prudent to go for higher FSI as it helps increase the area by 5 million square feet? And if we make even 2,000 rupees of incremental EBITDA per square feet, the overall EBITDA can go up by 1,000 crore, which is huge for us, and also much lesser execution risk as we know this market, okay? And some of the criteria is what we stated earlier, that we need a realization of around 6,000. So even if we say universal is 5,900, where we have some sharing, but we've already reached 5,300, 5,400, okay? So reaching that 6,000 seems quite possible in next 2 years, okay? And when we are looking at so many outside deals to grow the business, so why not get 5 million square feet more? And there, secondly, when we look at other builders, okay, let's say Oberoi or any others, okay, the focus is to get more out of the successful project, okay, and to get more FSI over a period of time, because you keep on increasing the realization and the overall thing, okay. But the way our thought process seems to be to sell fast and execute and get over it, okay. But the IRR can be very, very high if we are able to get incremental that 5 million square feet, and the cost is only 50-60 crores, what was stated in the earlier con calls, okay. So can you elaborate on your thought process here? And what am I missing, okay, or I am not able to think properly? So it will be helpful.
Thanks, Himanshu. This is an interesting question. So let me give you a broader understanding. So basically, this is a integrated township development. What I mean by integrated development, so this is a government guideline wherein there is no restriction of FSI in any particular plot. It's a floating FSI across the township. So I have the complete flexibility to use FSI in any sector as much as possible. So with that approach, instead of infusing more money, we are gunning for there is a significant FSI currently available with us. So how we can optimize that FSI with the use of minimal land. And once this FSI will get exhaust, then we'll top up with that after paying that additional premium of 100 rupees per square feet to get that additional FSI beyond 1 FSI. And at the same time, what I discussed in my earlier call, see, there is a delta loss if I go beyond 70 meters. So in order to consume that last 10% of FSI, if my rate is 5,500, I'm getting a delta of say 1,500 per square feet. If I go beyond 70 meter, 90, 100 meter, maybe with the same set of top line rate, maybe my construction cost will go by 300, 400 rupees. So ultimately, absolute number wise, my earnings will be same, but at the same time, my project will the high rise, my collection will get delayed. So we have done various kind of workings, and once we achieve the around 6,000 mark in the township, we will gun for the consumption of that additional FSI. Having said that, we have reserved around 50 acres in our township, a most prime land parcel in our township to cater to this additional FSI. So, but that is achievable once I cross that 6,000 mark in township. I hope I could answer your question.
Yeah, so slight clarification, okay. So let's say we have around 15 million square feet, okay, or 10 million square feet currently, okay. So if it increases to 1.7, we get an incremental 6 to 7 million square feet. Okay, the FSI moves up to 1.7. So we can use that incremental 7 million square feet on a construction of or on a land parcel of 50 acres. That is what you are trying to say. Okay.
See, basically, one FSI. Currently, our plans are not for one FSI. We are already, planning. We have already planned this township to consume around 1.3 to 1.5 FSI. I have just talked about that consumption of 0.2 FSI from 1.5 to 1.7.
Okay. Okay. So, but yeah, the thought is there that as the life increases, my EBITDA and my IRR for this project can improve very drastically. So
yes, certainly. So that's the reason now we are our township is at the inflection point at this moment of time. If you study various townships, there is a pain in first few years of laying the infrastructure and having the residents active in the township. So that is already done in this township. Now it's all about we are adding how we can add those the missing elements in township. Once that is in place, certainly we are confident that we can surpass the first benchmark of crossing 5,500, and in next round how we can achieve 6,000. So, but certainly those 50 acres will be reserved to cater to that premium development maybe 3-4 years down the line. So there will be very minimal loss of FSI, very minimal loss of FSI.
Okay. And we are ready to pay that 50-60 crores, whatever will be required.
Yes. See, it's hardly 100 rupees a square feet. So again,
yeah, I agree to that, and that's why the whole question was there. Yeah. One last question from my side.
Mr. Upadhyay, so sorry to interrupt, but we have participants waiting in the queue.
One last question. Just.
All right. Go ahead.
In case of Goregaon project, we have sold 140 crores of in last 2 quarters. Okay, but the collection, if I add for the last 2 quarters, is around 14 crores. Okay, and in case of Vayu, where we have done that 44 crores of sales. Okay, the collection is around 8 crores, which is 20%. Why my Goregaon collection is low? And again, in the Ville Parle project, the sales value is higher and my value comes to be a lower. Okay, so how should I understand this thing? Okay, so 19 crore is the sales in Jai Vijay and 14 crore is my collection. So some clarity on the way the things are happening, especially on Goregaon, which is premium project.
So let me answer first part of that. So basically, the collection is linked to the registration. So before registration, we can collect only 9.99%. So now the registration is under process, and the collection will be quite visible in this coming quarter. At the same time, it also depends on the construction milestones at site. Generally, since it is a Mumbai project, there is a good amount of time has to be given for the basement and excavation work, considering the the old developments in the vicinity. So generally, the speed of construction is slow at the front end of the project. Once we are come up at the plinth level, then certainly these collection numbers will be very attractive.
Yeah, so there will be only 20-25% due as of now once the registrations happen in our Goregaon project this quarter.
Thank you. I'll join back in queue for further queries.
Thank you. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Yeah, good afternoon. I have 2 questions. One is you mentioned we are working on size of almost 30 million. Just wanted to understand how much of is it how much of it is coming from Bangalore, because in previous calls we mentioned that we would be focusing on Bangalore, and as it seems Bangalore in the whole of the call also and even presentation there is nothing much which has been added on Bangalore. So just to understand on this 30 million, where does Bangalore fit in the whole scheme of things?
So out of this 30 million square feet, the Bangalore would be around 2.5 to 3.5 million square feet of deal evaluation in Bangalore.
And how do you see the scale up there? Like, are we finding it difficult to get more BD deals there, or it will remain at this level and the focus and energy would be more towards Bombay and Pune?
Not actually. See, basically, Bangalore, our approach is quite simple. So instead of competing with the big players over there, we want to be in the segment of 0.5 million to 0.8 million or 1 million square feet. So rather than having a big sizable project, we'll go for a 3-4 mid-sized projects.
And these 3-4 would be like, so our idea was till FY25 reaching that 5 million. So these 3-4 would basically help us bridge the gap for that 5 million, because largely it was Pune and Bombay and then a smaller part from Bangalore. So these 3-4 should, okay. And lastly on this SEBI, the show cause notice, what is it regarding? If you can just help us understand what is the whole idea there? Why this thing has come up?
See, we believe, when it comes to transparency, it is better to be proactive rather than reactive. So, as a best practice, we intimated to the stock exchanges about the show cause notice, even though it was not mandatory at all. So it mentions clearly, LODR. So LODR itself implies it's a technical violation of certain regulations with respect to quality of disclosure and filing. Nothing.
Yes, sir.
And we have appointed a well-known firm like Khaitan, who are a legal counsel. So and the matter is sub judice. So beyond this, we cannot disclose. But just to be very clear, this has got nothing to do with insider trading. Insider trading violations come under PIT regulation, which is a completely separate section and not related to our show cause notice at all.
Sure. Thanks a lot.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
Hello. Can you hear me? Hello.
Yeah, hi. Yes, go ahead, Faisal.
Sir, how much would you be sure of that?
Mr. Hawa, sorry to interrupt. Your voice is coming too low, so maybe request you to speak closer to the answer.
So how much would be the IT sector be really contributing to the growth in sales and I mean, how do you feel that prices will behave in the next 2.5-3 years once the inventory is sold off?
So certainly it is quite visible through our bookings that the good amount of bookings volumes are coming from our IT sector employees. At the same time, there is a positivity in the IT sector. So whatever the information that we have, the pay scales, the pay revisions are happening very positively in the IT sector, and ultimately affordability is also all-time best at this moment of time, and backed by the good increments, then certainly there will be a good contribution in terms of volume coming from our IT sector for us, particularly in Pune and Bangalore projects. And for the ticket size in the range of say 40-50 lakhs to 80-90 lakhs. Yeah. At the same time, and it's quite visible through our very good sales number in LR. So that is again backed by the good traction from the IT people. So that is the highest selling project of Pune for the calendar year 2021.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference over to the management for their closing comments. Over to you.
Thank you once again for your interest and support. We'll continue to stay engaged. Please be in touch with our investor relations team for any further details or discussions. Look forward to interacting with you next quarter.
Thank you. Ladies and gentlemen, on behalf of Kolte Patil Developers Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your line.